Good morning and welcome once again to today's live technical analysis. For a change, we're going to be starting off with the British pound. So, the UK's employment data was released earlier on today. Unemployment rate remained steady at 4.4%, whereas the employment change figure came in slightly higher than expected. As such, it may have provided some support for the British pound following its release. However, if we look at the cable chart, so GBP against USD on a daily time frame, you can see that it's moving in a relatively downward fashion. Now, this for me is not surprising. We can see that the dollar may be making some gains today as it was losing for, I'd say, a better part of the week. Such, we might be seeing a retracement, and as a matter of fact, it has broken below our S1 support level, which may tend to imply either a sideways bias between S1 and R1, which is now our old support level. The concern I do have is the RSI indicator below our chart, which currently registers a figure near 57. Now it's not above 60, so it does imply that the bullish sentiment may be fading away in the particular pair. As such, we'll have to see that and we will readjust. The time currently is local time 12:15 p.m. We have I'd say, the EU Commission President voting are due to take place in approximately 45 minutes. Now, there was a possibility of political instability within the EU should no Commission President be elected, so essentially political deadlock. But the comments made by Commission President Ursula von der Leyen in regards to increasing border patrol agents, an EU defense minister, and if I'm not mistaken, the EU shield, tends to imply, from my point of view, that a deal may have been struck with the ECR in order to secure her presidency. As such, I would not be surprised to see the ECR voting in favor of incumbent President Ursula von der Leyen, and as such, avoiding political deadlock within the EU. What is more interesting, however, is at 3:30 p.m. local, we have the ECB's interest rate decision. Now, the majority of market participants are anticipating the bank to remain on hold, with the Euro OIS implying a 95.15% probability for such a scenario to materialize. As such, with the majority of market participants anticipating the bank to remain on hold, our attention will turn to ECB President Lagarde's press conference, which is set to take place, if I'm not mistaken, roughly an hour later following that decision. So, market attention may turn to that. And should she imply that the ECB may continue cutting rates this year, may be considered dovish, so going in line with the market's expectations, which could weigh on the euro. Whereas if she shows any sign of hesitation to cutting interest rates further this year, could be perceived as hawkish and may provide support for the euro. Personally, I think there may be a bit of a hawkish undertone in her comments later on today, which could provide some support for the euro. I think the ECB doesn't want to entirely commit to cutting interest rates this year further. Such might be perceived as hawkish, but that is purely speculation at this point in time. Looking at the Euro USD chart, you can see S1 and R1 remain the same. The upwards moving trend that we had placed remains intact. We would maintain a bullish outlook as long as it stays above S1. Now, if it doesn't move significantly higher in today's trading session, we could maintain a sideways bias between S1 and R1. But as long as this upwards moving trend line continues to be valid and intact, we would still maintain a bullish outlook from a more macro perspective. If it does break below S1 at 1.0915, then potentially we could switch for a bearish outlook, with the next target for the bears being the S2 support level at 1.0860. Back to the USD JPY chart, you can see that it is moving in a downwards fashion. So our bearish outlook yesterday appears to have been validated. We would still maintain a bearish outlook for the particular pair. The JPY, as we said yesterday, we expect that this was a potential intervention in support of the JPY, with another occurring later on during that day, so the past Friday. For tomorrow, we're noting Japan CPI, which are expected to accelerate, showcasing persistent inflationary pressures, and as a matter of fact, should they come in at 2.7% on a core level, could provide support for the JPY. As such, we maintain a bearish outlook for the particular pair, having broken below yesterday's support level, turn to resistance. Next target for us is S1 at 154.60. So, as long as it breaks below S1, we would maintain our bearish outlook. If it fails to break below or bounces off S1, then we could switch for a sideways bias between S1 and R1. If it breaks above R1 and makes a clear break above R1, then yes, we could switch towards a bullish outlook, Although I would be very, very concerned about another potential, another hypothetical intervention from the Japanese government. Back to GBP USD, so cable. Now, this is a very peculiar situation. I think I need to readjust my support level as one, although this was very nice. We need to readjust our support levels. I will be removing S2, and then we need to readjust S2 and then S3. Old high, validated high, and probably validated back as well. We have acted as resistance for the time. More or less valid. If we take the most recent price action, prior high, potential valid support level, bit concerned, but still would maintain that for S2. So readjusting our support and resistance levels. Our newest one is 1.2945. Our newer one is just slightly lower at this peak here, 1.30430. So we can keep R3 and R2 and simply readjust R1. And then we've done S1. S2 needs to be readjusted to 1.2837 or 35 if we round that down. For S3, 1.27000. So 1.27. Still maintaining a bullish outlook as long as it stays above S1, as we've said moments ago. USD the Swiss franc has strengthened against the US dollar. So we had placed these support and resistance lines quite a while back. You can see that S1 was validated. S2 was broken and absolutely destroyed during yesterday's trading session and is now bouncing off S3. We would switch for a bearish outlook for the particular pair. Next potential target for the bears might be the 0.8725 support line. Might see a retracement today back up to our oldest one level before it continues moving lower. But overall, a bearish outlook for the particular pair. We could even draw a downward swinging trend line, which could further support our hypothesis. We're seeing a death cross being formed. The 100 moving average crossing below. Might be a bit of a concern. So the 50 moving average crossing below the 100 moving average, potentially forming a death cross. Bearish for the pair. Would maintain a bearish outlook. If we see more data, Intel. So there appears to be a bit of an issue with the tech sector. Now, if we go to the Nasdaq, I think this might be a bit more clear as to why that may be happening. So as we said yesterday, looking at the weekly chart for the Nasdaq 100. So let's just move that. Upward moving trend line is still intact, but still, you can see this formation. So this bullish candle, then this bearish candle that wicked higher, forming a swing high. Now, if this week closes in the reds as it is currently, I would not be surprised to see a retracement towards potential support at 18,690. So essentially, if the Nasdaq 100, the index closes this week in the reds as it is currently, I would not be surprised if it moved lower during next week's trading session, potentially moving lower and lower. Now, one could say that this might be attributed to people selling. So it's done 36 all-time highs. That's for the S&P 500. So it's reached its peak for 2024. So people might be readjusting and moving into small caps, so the Russell index, which might be perhaps undervalued, such selling off from the Nasdaq and the S&P and moving their funds into something that's a bit undervalued and could provide or generate more returns for the rest of the year. So we are maintaining a bearish outlook for the Nasdaq 100 as long as this week closes in the reds and does not retrace back up to the opening price. We'll also look at the S&P 500. I think it is a similar story. And we said that this is invalid, so let's remove that. So this is what we had placed yesterday, our support and resistance levels. And then let's just move this. So we had support at 19,670. Hello. We had S2 at 18,596. And then S3 at 17,183. We are still maintaining a bearish outlook. RSI is dipping below 70. Bullish momentum might be fading away and might be due a retracement back down, perhaps to even S2, as you can see by the mid-range of the Bollinger Bands. If it does manage to break above our R1 level of 20,958, we do have hypothetical R2 at $22,050. Now, going back to Intel, overall, Inter is very nice. Their size at 65, but this bearish candle on the daily time frame not looking that good. From a more macro perspective, I would personally maintain a bullish outlook for Intel's stock price, but I am a bit slightly concerned from the sell-off in the tech sector. So if it does move lower, we do have S2 at $32 per share, roughly. Bearish outlook would need to break above. If you would like to do the technicals for Intel, simply ask and we can look at that together. Looking at oil, I need to readjust my support level 79.40. So this is what we have for our S1. So oil, interesting story. RSI is now at 50. So simply looking at the technicals, Bollinger Band smoothing in out. Upper band is on R1. Lower bound is on S1. RSI close to 50. Sideways bias between S1 and R1. Clear break below S1 would constitute a bearish outlook, taking aim for S2 at $76, which is what it is currently. Then S3, 71.40. If it does break above R1, taking aim for 87.10 potentially. Higher than that, $90.94 per barrel. For now, sideways bias between S1 and R1. Looking at Microsoft, capped lower, slightly retraced. Our S1 level that we had, $442.12 per share, just invalidated slightly, and as such, we are readjusting it, $437 per share and 90 cents. So some change as well. We have S1, S2, and S3. You can take a screenshot and place them on your charts and monitor it as well. We could place an intermediary resistance level at this high that was formed at 467.95. So that would be my intermediate and temporary R1 resistance line. You can see selling pressure and moved lower. R1, R2, R3, S1, S2, and S3. But the moving averages still point towards a bullish outlook, and so does the upwards moving trend line. So the decline in Microsoft might be temporary. The concern I have is the RSI, which is steeply dropping below 50, 45 currently, which might imply that the bears may be taking over the company's stock price's direction. And looking at the Dow Jones, now in comparison to the Nasdaq and the S&P 500, the Dow Jones is forming new all-time highs. Bullish outlook for the Dow. Upwards moving trend line remaining intact. R1 broken, moving higher and higher. Looking at gold, so we are looking at gold from the 4-hour time frame. So this is what happened yesterday. We discussed it together during our live session. Now, what we did not have was the next 12 hours, but we did correctly anticipated moving lower back down and close to our S1 level of 2,450 before bouncing off and moving higher. The issue I do have is with this 4-hour candle. If it closes in the reds, we could switch for a bearish outlook, but for a bearish outlook, we would require it to break below S1, which is 2,450. Rather than that, we have S2 at 2,400. However, looking at gold's price action over the past few days, I think it makes sense that it was retracing slightly and might continue in its ascent. From a more macro perspective, look at the upwards moving trend line. Bollinger Band is tilted towards the upside. Same with the moving averages. Now, the RSI is close to 60, which might imply that the bullish momentum might be slightly fading away if you look at it where it was before. So 70 dropping down to 60, but still it is above 60 and above 50. So we could maintain our bullish outlook for the precious metals price again, but would have to break above R1 of 2480. Let's drop down to the 15-minute time frame and see what's happening now. Okay, let's play some intermediary support levels. We do prefer using the 4 hour, but looking at the 15-minute, we can see some support as well. So we can see support 2464. So we're seeing perhaps some support at this level here. The next support level could be at 2457. That would be my next one. Resistance intermediary would be placed at 2473. Bollinger Band is probably smoothing out. RSI has dipped below 50, but it's still close to 50, so it's at 45. Bears may be taking over the precious metals price direction, at least on a 15-minute time frame. Now, this could be a retracement before it continues moving higher. So it depends, but the 4 hour not looking that good, which is why we like to use the 4 hour, perhaps even the 30-minute, and not the 15-minute. Nonetheless, from more macro perspective, as we've said, we are maintaining a bullish outlook for the precious metals price. If there is anything in particular you would like to see, feel free to ask. We've done Microsoft, Euro, the British Pound. We could do Nvidia, the Aussie. Aussie bouncing off R1, very nice. Still maintaining a bullish outlook for the Aussie. It's bouncing off R1, validating it once again that it is indeed a support level. Next target is 0.6870. ExxonMobil, as we said, we're bullish. Very nice. Has broken above R1. Next target could be R2 at 119.53. Note this gap up. Very nice. A bit of a concern from the moving averages, but look at the RSI. Steeply accelerating from 50 to 63. Some bullish momentum appears to exist for the company's stock price. What else can we look at? So we've done oil. To retail cash. We really haven't done Nvidia. We need to readjust that chart. It's Microsoft. That's Intel. USDC Chef. Aussie. That's nice too. USD CAD moving in a sideways fashion. So smoothing out. Our size at 50. Bollinger Bands between S1 and R1. Validating support and resistance. Hasn't really tested again, but still you can see selling pressure around this level. Sideways bias between S1 and R1 for the particular pair. Let's see what else we can have a look at. We can do Hewlett Packard. We can do IBM. We offer many, many, many instruments. We can do China. We haven't really done China. Could do the UK 100. So the FTSE. Let's do the FTSE. Not losing anything anyways. We have some time left. So the FTSE, labor is now in control. In terms of financial releases, I forgot to mention the Philly Fed Business Index is set to release later on today. But if you ask me, I think the euro will take precedent, and the dollar's direction may be impacted slightly from some Fed speak later on today and in tomorrow's Asian session. So let's look at the FTSE. So the UK 100 index, daily time frame. Nice. All right. So let's see. Support. We have essentially a naked chart. All we have is Bollinger Bands, moving averages, and the SI. That's nice. Let's look at the price action. I can see numerous wicks aiming for a particular level. This looks nice. 8,140. That would be my support level. So that's S1. Note once, a second time, and then for a third time, reach for this level. So there are buyers at this point, or so it seems. 8,140. That would be my S1. Now, the issue we do have now is that you can see that there is buying pressure here. The issue is we need to find S2. This here is too close to our S1. What if it moves significantly lower? It could break below S2 and even S3. So for S2, I would place Price action here. Selling pressure. These wicks don't really that nice, but still, selling pressure managed to gap up and break above. So potential support level. And then just to be on the safe side, 7,890 for S3. Once, a second time, and then a third. Broke up, moved higher. For resistance, we're going to take this recent high, this recent resistance level, 8,287 as our R1. So that would be my R1. For R2, 8,392, and then this most recent high, 8,479. They're fairly close to one another, but you can see resistance at those levels. Overall, I would be maintaining a relatively sideways bias for the UK 100 index. Bollinger Band is smoothing out, our size at 50. Let's see whether the bears or bulls win, and then we can readjust our bias. Let's see what else can we do today. Soybean, corn, coffee, sugar, copper, UK oil, cocoa, Brent, UBS, Coca-Cola, Disney. Let's see. We can look at Google, Verizon, Wells Fargo, the motors. Tesla might be interesting. Let's do Tesla. Right, so we do have Tesla. This is the daily chart. Let's look at the weekly one. Let's get a better picture. Might be a reversal formation, but we might be seeing also a golden cross being formed, which is bullish in itself. Daily chart not looking that good. Hasn't broken the most recent high, but did form a new higher low. RSI is at 66. We might see a bit of a retracement before it moves higher, but from a more macro perspective, I would be personally bullish for the company's stock price. Now let's place our support and resistance levels. So this most recent low, $233 per share. That is my S1. I need S2. Recent high relatively, $204 per share and some change. And then 167.08 for my S3. So this could be used from a more macro perspective for a few weeks in terms of the support and resistance levels. R1 271.27. So this high here. Now for R2, $299 per share. Stock split. And then $327.78 per share for my R3. So as you can see, we have placed our support and resistance levels. I would not be surprised to see the company stock price move back down to S1, 233, validating that it is indeed a support level. If it does break below, the next potential target for the bears could be at 204 and 9 cents. Then lower than that, 167.08. But if it does break above R1 of $271 per share roughly, and then the next potential target for the bulls could be at the $299 per share mark. If it does break above that, potentially 327. But there is a significant distance for the company's stock price to cover before it even reaches towards R3. So we've done Netflix, we've done the FTSE, we've done the Nasdaq, S&P, oil. Haven't really done the euro against the Australian dollar, although I would be bullish for the euro against the Aussie. As you can see, yes, oil, but WT cash, USD CAD sideways, Euro Swedish krona bullish for the euro, ExxonMobil bullish for ExxonMobil, Aussie still bullish, must not break below S1. Target could be, as we said before, 0.68. 0.686, well, 0.6870. Nvidia Not looking that good, would be bearish for Nvidia. Look at the Nasdaq, so that makes sense as well. Intel, bearish from a short term. For a more macro perspective, though, I would be bullish. US dollar against the Swiss franc, bearish for the particular pair, so we're bullish for the Swiss franc. Target could be 0.87257. British pound against the US dollar. Bullish from a more macro perspective, but for the end of the week, sideways bias between S1 and R1. USD JPY bearish. And for the euro, we are still maintaining our bullish outlook despite the most recent price action. I would like to see it testing S1 and then rapidly accelerating towards R1 for me to maintain my bullish outlook. And I think that does it for the day, unless we could have just one final look at another one. So Intel, Microsoft, IBM. If there's anything you'd like to see, now is the time to ask. Otherwise, I think we are probably done, and we'll see you all next week. Let's see, is there anything interesting? We do have earnings as well next week, so we could be doing a technical analysis depending on the demand for particular stocks, so we can have a look at them together, place our technicals, look at the earnings, and then look at them again. I think more or less we're done for today. So, small recap. ECB's interest rate decision, main event of the day, and then the Philly Fed Business Index. After that, you have some Fed speak. Tomorrow, Asian session is Japan's CPI rates. That might be the highlight of tomorrow's Asian session. Thank you very much for watching, and I'll see you all next week.
In progress. Okay, hi everyone, and welcome to today's webinar. So for today's session, we are going to be talking about price action. We're going to give about 1 more minute to let more people join the session before we get started. So in the meantime, let me know in the chat if you guys can see me and hear me, and can see my slides as well. And then we'll begin in about 1 more minute. Thanks, everyone. Okay, let's go ahead and get started. So, as per usual, a risk warning and disclaimer, our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Rocket, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. We're gonna start off by talking about the anatomy of a candlestick, some price action trading approaches, and then we'll look at the different candlestick patterns. And then lastly, we'll combine candlestick patterns with what we already know, such as your support and resistance, your Ichimoku, and some other indicators as well. If you guys have any questions throughout the webinar, feel free to let me know in the chat, and I'll try my best to answer all of them. Okay, let's go ahead and get started with the anatomy of a candlestick. So here's we have a bullish and a bearish candlestick. On the left, we have, so basically the tip of the bullish candle is the high price, and the close price starts when at the start of the body of the candlestick. If we look at the lower wick, the open price starts at the bottom of the body and ends at the low price, which is at the end of our candlestick. So obviously the opposite is true for our bearish candle. Your high price would be at the top of your upper wick. Open price would be at the start of the body of the candlestick. Close price at the end of the body of the candlestick. Low price would then be at the bottom of your lower wick. So here's our price action trading approach. Okay, we have the reversal and the breakout. So here's an example. We have price moving within a ascending trend channel. Okay, and we have what's called a morning star formation right at the tip of our at the lower band of our ascending trend channel. Okay, so when this morning star formation starts, we are expecting a reversal to continue within the ascending trend channel. You can see that's exactly what happened here. Okay. Next, let's look at the breakout. So we have this area here, this resistance area, which is with one swing high, swing low, and a couple of swing highs. So basically, when there are bulls and bears that respect that area, or there are swing lows and swing highs that respect that area, it's basically called an overlap level. And this is a very strong resistance area where we are expecting price to break through. Okay, and you can see exactly that's what happened here as well. Okay, and how do we know that price is going to break through? Basically from, again, the formation of your candlesticks. Here we have what's called the three white soldiers. So there are many formations of candlesticks out there. So if you just Google, there will be many templates that you can take a look at. So you don't really have to remember off the top of your head the different shapes or formations of these candlesticks. Just as long as you are comfortable using a couple of them, you can always refer to Google for any templates or any guidelines on the different shapes for candlesticks. Okay. Okay, so moving on, we can see after this three white soldiers, price broke out really strongly and rose above our resistance area. Okay, so before we get started and we dive into the different candlestick patterns, this is basically what price action is. So it's basically the movement of a security's price. In this case, would be Forex, plotted over time. So that's why we are looking at specific candlestick patterns or which tell us the price movements without relying on the different indicators or even algorithms. So it's all about understanding the market's natural behavior. Okay. And then we'll show you at the end how to combine these natural market's natural behavior, which is then our price action, how we combine that with our indicators so that we get a greater understanding of the direction of price. Okay, so let's get started. So we're gonna start off with the three single candlestick patterns. We have the hammer and the hanging man, which are just opposite of each other. Okay. Secondly, we have the inverted hammer and the shooting star. Again, these are just the opposite of each other. You can see the difference in the shapes. So the upper wick would be a lot smaller on a bullish or a hammer. And your lower wick would be a lot longer. Whereas for your hanging man, we're looking at a bearish candlestick, but looking at the same shape. So again, this is a bullish candlestick. This is a bearish candlestick. If we look at an inverted hammer and a shooting star, again, you see the shape of the candlesticks are exactly the same. Here, we don't really have a lower wick that we're looking at, which is mainly the body of the candlestick as well as the upper wick. So for both of these, this is a bullish candlestick, that's why it's green, and a bearish candlestick, but exactly the same pattern. Okay, and next we have the dragonfly doji and the greystone doji. Okay, so again, we can see price moving um or rather these candlestick patterns are exactly the same. It's just that in this case, we are looking at a bullish candlestick pattern, and over here we're looking at a bearish candlestick pattern. Okay, next let's look at the top two double candlestick patterns. Okay, so here we have bullish engulfing and bearish engulfing. So again, like we mentioned earlier, we have the exact kind of same pattern, just that one is moving upwards and one is moving downwards, since it is bearish. Okay. Okay, so let's move on. Here we have the second double candlestick pattern. So for this one, we are looking at tweezer bottoms and tweezer tops. Again, the candlestick patterns are exactly the same. And it's just that we are looking at the price looking at a reversal from down to an up trend, and on our tweezer tops we're looking at a reversal from the uptrend to a downtrend. Okay. Next we're looking at our top three triple candlestick patterns. Here we have our morning star and evening star. So our morning star is kind of a signal that price is going to reverse again, similar to our engulfing pattern. If I go back. rather similar to our tweezer bottoms, you can see when we are able to spot a morning star, praise is reversing in its trend. Evening star, similarly, it's also reversing in its trend by giving us a bearish direction instead. Okay, so for the morning star, it's typically occurs at the end of a downtrend. That's why we say it's a reversal. So the first candle, which is this red one, it's a long bearish candle, which indicates a strong downtrend. Okay, whereas our second candle tends to be a smaller shape, can be bullish or bearish actually, that gapes down and it shows indecision in the market. So this can be your doji or even a spinning top that we talked about earlier. Then your third candle, which is this green one here, would be a long bullish candle that closes well into the body of the first candle, signaling a reversal. So the pattern is actually more reliable when this third candle here, when it closes above the midpoint of the first candle. So you can see the midpoint will be somewhere around here. So if it closes somewhere around here, that's a good sign that price is going to continue in the uptrend. Okay, so obviously the opposite is true. For an evening star, we have a long bullish candle here, indicating a strong uptrend. Then we have that same doji candlestick here, showing indecision in the market. And then the last candlestick is basically a long bearish candlestick that closes well into the body of the first candlestick, which we see the same thing happening here. Okay, let's move on. Okay, so next we have the three inside up and inside down. Here we have a opening candle, which is a bearish candlestick, and followed by a green bullish candlestick, which is much smaller. And the opposite is true for a three inside down. Okay, so again, these are indicators of potential market reversals. That's why for our inside up, we can see a downtrend reversing up into an uptrend. For a three inside down, we see an uptrend turning into a downtrend. So for three inside up, we would see a first candle giving us a long bearish candle, indicating a strong downtrend, and then followed by a smaller bullish candle that is completely contained within the body of that first candlestick. That's why you see it completely within this area here. Third candle would be a long bullish candle that closes above the high of the first. Okay, so that confirms your reversal into an uptrend. Okay, opposite is true again for your three inside down. So starting off, we have a long bullish candle, which indicates an uptrend, strong uptrend, and a smaller bearish candle here that's completely contained within the body again, confirming. And then lastly, the long bearish candle closing below the first candle, confirming the reversal. Okay, we have a question here. What time frame do you see good setup for signal? Okay, so the time frames that we normally would use for these candlestick patterns is completely up to you actually. Um, we just normally like to do our analysis on swing trading. So that will be like your medium term trading, we're looking at 4 hour to your daily charts. You can also go down to your shorter term trading if you are a day trader, or your intraday trading, which would be about 30 minutes to 1 hour. We typically won't recommend you to go below 15 minutes just because it tends to get a little bit too noisy on those shorter time frames. Um, but yeah, especially for candlestick patterns, it doesn't really matter which time frames you use. Just yeah, those are just the ones that we normally like to use. Would be 4 hours daily, 1 hour. Yeah, but the lowest we will go is 30 minutes. Okay, it will probably be easier for you to catch these reversals for candlestick patterns on a shorter time frame as well, because patterns on the shorter time frame, so like your 30-minute and 1 hour charts, can kind of provide you multiple trading opportunities throughout the day if you are looking at intraday trading. So those might be better for candlestick patterns. Okay, so now let's look at combining candlestick patterns with what we already know. Okay, we're going to start off with support and resistance, followed by our trend lines, oscillator indicators, and momentum indicators. Okay, let's get started. So, again, if you guys have any other questions, feel free to let me know in the chat. Okay, so support and resistance is basically the price at which an asset's price tends to stop falling, which would be your support level, or start rising, which would be your resistance. So you would identify these levels using technical analysis tools such as your trend lines, moving averages, and chart patterns. And these would be your swing highs or your swing lows. Okay, so here's an example. This is just a really quick recap on your support and resistance so that we can kind of go through how to identify these levels with your candlestick patterns. Okay, so here in this chart, I have drawn out our swing highs and lows for you to look out for. The swing low would of course be your first support, and your first resistance is basically the level that is closer, the swing high that's closer to where price is currently at. Okay, next. So here's an example of an insignificant swing. So these levels are bad to use for your for Fibonacci points. Here we're talking about Fibonacci, but they are bad to use for any kind of resistance or support levels that you're looking at. Okay. Yeah, here's another example of insignificant swings. Okay, so you can see there aren't really any clear patterns here. No real swing highs or swing lows. Okay, and here is an example of significant swings. So there is a very clear move up and down with obvious peaks and troughs and a very clear market movement. So these are really good levels to use for your support and resistance. And they're easier to spot for your candlestick patterns as well. Okay, someone asked, what's the need of learning candlestick types and what roles do they play in trading? So they actually play a pretty significant role. Firstly, would be each candlestick kind of encapsulates a lot of information about the price action within a given time period. So like we went through at the start about the anatomy of your candlestick, it includes the opening, the closing prices, the high and the low. So it tells you what the sentiment of the market is as well. So for example, a long bullish candlestick would suggest a strong buying interest, while a long bearish candlestick would then suggest stronger selling interest. So that would probably be more useful on your shorter time frame. Again, most of these, I can't tell you whether it's useful for you as a trader, because everybody has different strategies and trading techniques. But yeah, it is still important to know the different patterns. Okay, because like we went through the different types of candlestick patterns or the top ones to use, those can help you to identify the beginning or the continuation or reversal, so on and so forth, or the ending of trends, example. So I think just now we went through a bullish engulfing pattern. So that would indicate the end of a downtrend and it might indicate a reversal to an uptrend. So that allows you to predict future price movements based on your historical data as well. Okay, so yeah, so all of the webinars that we have, and all of the tools and strategies that we give you might not be applicable for you personally as a trader, but it helps to have multiple tools so that you can confirm your indicators, by using your trend lines, all of these support and resistance levels as well. It just basically helps to confirm your analysis. Oh, and another important thing would probably be that the candlestick patterns can help you to determine your optimal entry and exit points as well. So that's why we're going through this resistance and support recap as well. So that because resistance and support levels are often really good levels to use for your entry and exit points. So these candlestick patterns further help you to determine even better points as well, especially if on these support and resistance levels, you can spot a candlestick pattern there, then it further confirms your analysis. Okay, we have another question. Let me see. On a bearish setup, is there any white soldier candlestick which will indicate that there's possibility for support breakout? Um, the three white soldiers typically refers to a bullish setup. On a bearish, in the bearish context, okay, maybe let's go back to my slides. I can't really remember the patterns off the top of my head as well. Um, yeah, so for bearish, we would be looking at the three black crows for a bearish setup. Okay, I hope that answers your question. So these are just basically three consecutive long-bodied bearish candlesticks with progressively lower closes, indicating a stronger bearish sentiment. Okay, so the opposite of a three white soldier candlestick pattern. Okay, so for example, once you're able to spot this pattern, you might want to use your momentum indicators like your RSI or MACD, for example, which show you if they show you a bearish divergence or moving into oversold territory, that can signal weakening bullish momentum and potential for a support breakout. Okay, okay. Let me get back to my slides. But yeah, let me know if you guys have any other questions. So here's an example of significant swings. Very clear market movement here. And support and resistance. So these levels, as I mentioned earlier, are used as your take profit, stop loss levels, entry, exit, so on and so forth. But an important thing to note is to make sure that your swing highs and lows, there are multiple swing highs and lows that line up together so that it strengthens your entry and exit levels. Okay, so there are at least two swing high or low levels that line up nicely. It's a much better level to use. So that's why we want to try and find levels where these might line up. So it doesn't have to be exactly at the same level as long as it's near, that's good enough. Okay, so let's look at how to pick your starting point for your support and resistance and your entry exit levels. So when picking the starting point of pivot, entry, support, resistance levels, there are a couple of rules. Firstly is to check if there's a swing high or low, pullback or overlap level to start from. Next is to go back as far as possible without intersecting too many bodies of candlesticks. Okay, so we have some swing highs here, where the price, or rather where the resistance level cuts the wick of the candlesticks. That's fine. Over here, it's kind of cutting the bodies a little bit, so that's not too preferred, but that's fine as well. So some more examples here. Okay, you can see when it cuts through nicely just one body of the candlestick, that's fine. This is something that we want to avoid because it's cutting too many bodies of candlesticks. Okay, we just want clean cuts of just the wick. Okay, here's another example. Take note of this red highlighted area because we want to avoid intersecting so many candlesticks. Okay. Okay, now let's look at the pullback and the overlap. So I did kind of mention the overlap earlier, but a pullback support is basically before an overlap occurs. So it's a strong level of support and resistance, and it breaks out from previous resistance level, and price is now dropping back to visit it again. So when a pullback support level lines up with a Fibonacci level, it's very powerful. And these levels are also made powerful when you are able to spot a candlestick pattern as well. So this works well when it breaks a significant swing low and then starts pulling back to it. It's even better if there are multiple Fibonacci levels that line up with it. Okay, so now let's look at the pullback resistance. We have some swing lows here. Okay, we have three swing lows here and price is breaking below the swing lows. And we're looking at it, we're expecting it to hit towards that same level and reverse off of it. Okay, that's exactly what a pullback resistance is. Now for pullback support, we're looking at a resistance. So here we have three swing highs, making it a pretty strong resistance level. And then price has broken out of the swing high resistance. Okay, so it's broken out of it, surpassed it, and now we're expecting it to reverse back to that same level. Okay. Okay, I'm just gonna. Okay, so now let's combine our pullback and overlap levels. Okay, I already mentioned the pullback support earlier, so let's talk about our overlap levels now. So an overlap level, like I mentioned earlier, is basically when price comes back to it like this, um, and it actually reverses off of it. So when we have a swing high and a swing low that line up nicely, that's an overlap. Okay, so here we have a big swing high resistance here. The moment price surpasses the swing high resistance, it becomes a pullback support. Okay, and once we see price pullback to that pullback support level and bounces off of it perfectly, that then becomes an overlap support. Okay, here's another example. We have a couple of swing highs here. Okay, and price breaks out of the swing high resistance and pulls back to it. So once price breaks out of it, it becomes a pullback support. Once price pulls back to it and bounces off of it, then it becomes an overlap level. And once price bounces off of it again, it now becomes an overlap support. Okay. Okay, another example. So here there are multiple swing lows in line at the 33420 level. And once price breaks this level, it then becomes a pullback resistance. We can see price has tested this level 3 times, making it a strong overlap resistance level. And we can see price surpass this level again to become a pullback support. Lastly, it tested this level and bounced off of it, becoming an overlap support. Okay, so now let's combine all of these with our trend lines and price action. So here's what a trend line is. Just to recap, as it's a valid trend line if there are at least 3 touches on it. So we have one swing high, two swing high, and actually four swing highs here. Okay. Here we have price moving within an ascending trend channel with multiple swing highs again and swing lows. So what makes it a valid trend channel is if there are 2 touches, minimum 2 touches on top. Here, of course, we have 3. And at the bottom we also have 3, but at least 2 touches on top and below, that's good enough. Okay. So here we have price moving below or bouncing off our Ichimoku cloud. And here we have a swing low support, price breaking out of it, and we are expecting price to um, continue to bounce off of it. Okay. Okay, are there any other questions? Okay, if not, there was a question about the um which I think there was a question about the time frame. So let's briefly go through that as well. Okay. I just wanted to talk about which time frame to use, just really quickly. So here's an example of price. You can see it's um kind of messy. There isn't really a very clear market structure. And this is on our M15 chart. Okay, now if we change that and we look at it on an H1 view, the exact same chart, just on a different time frame, you can see the market structure is a lot clearer. Okay, so the thing to learn here is that at the very basics, the clearer the swing low and the clearer the swing high, the clearer the trend between these 2 points, the more accurate your analysis will be. Okay, so it doesn't really matter which time frame you use because that's very dependent on your own lifestyle and your own trading methods. But yeah, as long as you make sure that your market structure is clear, that's fine. Okay, so yeah, so typically traders will choose at least 2 time frames, such as your short-term time frame and longer-term time frame. So like I mentioned, we don't go below 15 minutes because it's kind of How can I set Ichigo? Okay, so let me get into that in a bit. But basically, we don't go below 15 minutes because the charts tend to be a little bit too messy on those time frames. So your short-term time frame is used to identify the most recent trends and price movements, which is why again just now I mentioned that we if you look at your price action, so like your candlestick patterns, those tend to work better on shorter time frames. So like your 30-minute and 1 hour time frames, maybe even 4 hours. Okay, but your longer term time frames will be used to identify the overall trend and market direction. And again, we will use all of those together with key support and resistance levels, trends, patterns, indicators. Okay, so what we look out for on the higher time frames will be key graphical levels. Those, this horizontal levels that we're talking about are those that we just went through. So your support, resistance, pullbacks, overlaps, all of those. Trend lines, trend channels that we also just went through. Some breakouts, big moving averages. These big moving averages and Ichimoku, those are your indicators that you would use after doing all of this technical analysis. Big Fibonacci levels, those are those we cover more in depth in our Fibonacci series. And lastly would be your price action, especially the prior bar. So this is what we're talking about today, what I was talking about with the candlesticks and all of that. Okay, let me just answer some of the questions now. Um, okay, I can show you how to set up Ichimoku in a little bit. What is a 3 super trend indicator? And does it work on MT4? So the super trend indicator strategy, this kind of um not really related to today's topic, but it's basically it follows the trend, obviously, and it's based on the ATR and closing price. So ATR is your average true range, and it helps to determine the trend of the market. So of course, there's an uptrend when the price is above your super trend line, and downtrend when the price is below the super trend line. Does it work on MT4? I'm not super sure. I don't think the mobile app supports custom indicators like that. But I'm not too sure. Maybe it works on the desktop instead. Um, yeah, maybe you can check on that. Because I don't think, because I think super trend indicators are custom indicator, and your MT4 mobile app cannot set up custom indicators, if I remember correctly. Okay, setting up Ichimoku on your phone or laptop. I can show you how to do it on TradingView. Let me just open my TradingView. Okay, so if this is just a random chart that I have open, if you click on these indicators, and search up Ichimoku Cloud, okay, yeah, it show up like that. It might not show up like this actually. Let me, okay. So this is your Ichimoku Cloud. Okay, and basically you just click on indicators, search up Ichimoku, and this is what it'll look like. Click on settings, and there's actually a lot of different lines when it comes to Ichimoku. I'm not gonna go through in depth what they each represent now, but I'll tell you that we normally just look at the cloud. Okay, so we normally just look at the plot's background. If price is moving above the cloud, it's a bullish signal. If price is moving below the cloud, it's a bearish signal. So that's one of the quickest ways to use Ichimoku. Yeah, so this is on TradingView, if which you can use on your phone or laptop as well. So for Fibonacci, which I didn't really have time to talk about in depth today, but I did kind of mention it in our price action. So you can take a look at this website. Um it's a free website to use. It's just the forexarmy.com. You can look at some free videos that we have on YouTube on retracements, extensions, some guidelines. Yeah, so what are the different levels that we use, how to use them, how to draw it so that it's valid, how to avoid invalid levels, negative levels as well. Because we use 4 different techniques when it comes to Fibonacci. So stay tuned for our Fibonacci webinar series. It's a 4-part series, and we go really in depth into each of the Fibonacci techniques as well as different examples. But in the meantime, you can take a look at this as well, in case you were curious, since I did mention them a couple of times in today's webinar. Yeah, I think that's it for today. Um, yeah, let me know if you guys have any other questions. If not, that's all for today's session. Thank you guys so much for joining me. I hope you guys found this session helpful, and I'll see you guys again next week. Thanks, everyone. Bye.